Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we had a little bit of a pull off the highs, and I feel like everyone in the trading room started to, punch TVs and get upset, even in the Twitter sphere. Oh my goodness, oh my goodness. And I just feel like sometimes perspective is lost. I know that the 2 o'clock minutes were a little bit, just say a surprise, so to speak, because they've always said that they're going to keep rates low. I think the last language was besides exceptionally low for a period, whatever it was, till 2015. Now they're saying 2013. You know what? It makes a little bit of sense. Rates can't stay down here for so long, right? You think about a lot of indices near 5-year highs or a few percentages off 5-year highs. And then you have the S&P probably 9 or 10% not even off all-time highs. And here we are with rates where they are. So at some point, they got to take the punch bowl away, so to speak, like you hear everybody talk about it. Or like at some point, the training wheels have to come off. And, at some point, that'll mean positive things. We have to wean ourselves off. We're not going to have QE 150. We're already on QE 4, probably even more than that because we haven't admitted to some of it. And, you have to deal with it. So with that said, we'll figure out how the market deals with it. And as of today, not the biggest deal. If you look at the chart of the spiders, look where we are. Here is the low in November. We talked about that November 16th low. Here is the move to this downtrend that we couldn't get through first time. Then we had to pull back through Christmas week into New Year's with the whole fiscal cliff. And then we engulfed it and gapped up. And all in all, look where we are. Look at this little day. And I know from a short-term trading world, which a lot of guys on our site are, it pushed through 146.15, whatever this high is, 146.15, went as high as 146.37. And closed, what did it close, 60 cents off the highs? Big deal. So we didn't have any more momentum or continuation after a move from, I know this even says 139.54. If you guys remember after hours or early morning, we were down to like here. So from here to here, in 3 days or so, everyone's saying, oh my goodness, game over. Come on, guys. So anyway, we're still above this, downtrend, which we're holding above. We talked about doing some sideways work above this pivot, which was about 145.50, which is what we're doing. We could even test the 144.73, which is the gap. And oh my goodness, we might even trade into it and come down to even here and then still hold a portion of the gap because that's what happens and still be deemed constructive for higher prices and then just the speed changes. So right now, all this was a day where we tried to break above today's high and continue, and the momentum was lost. Okay, where there was no more upside momentum or no more power above where we were. And we'll see what happens from here. So this could go sideways a few days. We have the big jobs report tomorrow. We'll see what happens. If we open lower on it, we'll see how we deal with this 144.73. If we open above it, we'll see if it could take out this 1474, or according to the spiders, 148.11. But all in all, today was not that big of a deal. So with that said, I was even getting emails about Bank of America. Red Dog, you should get out of your Bank of America, get short. I'm like, I've been holding this thing since 9 and change. We had a trade in this from 8 and change. I'm going to stay with it because of if it's the swing trade, there's nothing wrong with it. Yes, it could pull in, but if it pulls in, I've a very small amount versus when I had 9.95, I had a lot through 10, 10.70, I had a lot up until 11. Right here around 12, I'm staying with the trade, but I'm a lot smaller to let it figure it out. With that said, you talk about the XLF. All in all, guys are like, oh my God, look at the banks. The banks didn't go today. Banks aren't going to go every day. Look at this. This was Monday, powered up, held. We still held the breakout. We still didn't even test the gap. We're still way above the 8-day. That's got to catch up. Banks didn't come in. Banks weren't a problem today. Even Bank of America. Oh my goodness, it closed below $12. Okay, but look where it is. This was when you get core long, when it trades through a key area after being in a channel for a period of time. Here's when you add for cash flow through a nice flag type continuation pattern, and then it gets a little choppy. But overall, look where it is. Still, it went into the gap a little bit. It's still above the 8-day. You could even have a trending stock that's riding the 8 and 21 days, so extended from the 8-day. It's going to take some time. This could see 1160, and if it does, and we see the right setup, maybe we'll add more because we'll buy the dip since we've been trading around it so well from this area. Same thing with Goldman Sachs. Big deal. Okay, first or remember back here that when they had a lot of momentum, yes, it was a elevator ride up. And then this time you had a tight pattern. We put it off the charts to 120, and now you had another bull flag right here. Opened up yesterday. So what did it do today? Test the gap, not even, sideways. It's not game over, guys. Come on, grow up a little bit. So with that said, you go into even the home builders. I think some people were crying about those things today. So you go to XHB and you look at it, and you'll see that this also, what did it do? Oh my goodness, this held a gap too. Granted, it tried to break out. It was at all-time highs. It broke above yesterday's high of 27.48 and traded off it, but big deal. Look, it's above every moving average. It's been trending this whole time. Nothing has changed. It needs to digest. Stocks in that group the same way. You look at the XLI. What'd that do today? Ooh, nothing. You traded above the high, so if you chased it, if you didn't buy it on this day, or you didn't buy it yesterday, and you bought it because it went above 38.91, and you bought it here, maybe you're a little bit disappointed in yourself. But again, above the 8-day, above the 21-day, not even touching the gap here, it's fine. Look where it just came from, back in November. So with that said, just perspective, guys. Have some perspective. Even in high beta land, you talk about Google, and there was an early morning trade after a big move from November as well. It tried to get through 730, just didn't have the staying power. And some guys booked the trade, and some guys chased the trade. Okay, and I remember Sperling, he was trying to nibble into this 8/21 day when you buy a pull-in, then it gapped up, and then today it tried to break above a momentum level. It tried to break above 727 to 729. It actually went to 731, so it gave you a little bit of a trade, and then it did a doji close. So, not the best close, not a momentum close, but look where it came from. Remember the first core trade we talked about, which I only took a trade actually, was right here. So if you bought here, you have nothing to worry about still. It's just trending higher. The day it closes below the 21-day, maybe, it'll change and, we'll figure it out. But, and is it upsetting that there's not much momentum here? I guess so, but it's fine. Amazon, the same thing. If you look at this stock, it's a stone throw away from historic highs. Excuse me. If you look here at this descending channel, big descending channel into that November 16th low, pow, here is your buy when it broke above. And now, look where it is. It's right near historic highs, which always brings out some sellers, especially since retail is not acting so great right now. So, PS, here's where it held above the 50-day when most indices were coming into the 200-day, and it just didn't have enough power to break out. But we're not seeing a lot of things break out. But it's still above the 8-day, it's still above the 21-day. So at this particular point, doing some work above this area should be healthy, and then we have to probably wait for earnings. Even Apple. Apple, I would have loved it to hold, 544 to 546, and it didn't. And so I got out of some of the size that I had, but if you put in perspective from 505 or the initial or the trigger buy at 515, 520 up to 550, it's a big move. Short term, not a tremendous move based on where it came from the 700 level, but it's a little testy here, but it's still overall okay. I'm in very small. I was going to stop myself out at the low here, okay, which I traded around it a little bit today, but I held it. I'm still going to try and give this a little bit more time. Tomorrow we'll see what happens with Apple as far as I'll give it the last day. It's had a really big move from the highs obviously all the way down. You had a nice trade here on Monday. We've had some nice trades, believe it or not. And guys have made money short too. This was the first time we really sunk our teeth into it on this nice reversal here. Went up, held higher, and then got out of most of it in here. So this was a nice like $60 trade or so, and then pow. Then we had that other outside day, which was a good trade, but gave you nothing the second day. So if you had nice stops, you were fine. Then you had also another nice reversal day that gave you a second day, but then, did nothing. So on this day, we had a nice 2-day move. I would have liked more of an inside day today. We have a big macro descending channel. We have the 50-day in front of it, so it's going to need some time before it can get through there. So tomorrow, we'll see what happens. We'll use this as a pivot. 541, it might even, open below it, and who knows, come back above it, and then continue to build this type of pattern heading into this trend line, and then finally break above. But if it goes below, doesn't come back above, and just continues to falter and gives back the majority of this 2-day move, then it's kind of the same trend it's been in since it showed no commitment all the way from 700. So you'll just have to get out of the way. And then some of those guys out there that are talking about this weekly pattern and the failure of this support, it could happen. So as of right now, you really have to be on wait and see mode as we're holding support, nice wide range bar on the weekly, but you have this trend line controlling it. So we'll see what happens. I'm not trying to be a rock star here. I'm trying to take trades, and there was a really nice one from that Monday into yesterday, and now we have to see what develops. I'd love it, but who am I to say what it's going to do? I'd love it to hold around here, go sideways, and then get another juicy trade, just like we did through this descending channel, but through the bigger one, that could be even juicier. But we'll see. If it doesn't develop, I'm not going to have an opinion. I'm going to be objective, and I'll get out of the way. And I'll get a little bit of a paper cut, but I'm not going to put myself in harm's way when we're trying to figure it out versus something that was calculated like this through a trend line into some new flows. So with that said, we'll have to figure it out on Apple. As far as the OIHs, there was a nice little trade in rig when they announced a settlement, but then they didn't hold up. We tried that, it didn't work. MLNX, I know Sperling was caught in this thing. There was a little active trade there, nothing so great. To me, I hate to say it, I don't know what he was trying to do here. Okay, look at this huge hole in the chart that never got filled. So there was a big gap here that controlled this, and that's why not surprising that it broke lower. And then from here into the end of the year, I guess you could try a lower level trade. So, but it's just bad luck that boom, pre-announced and on the first day of the year, and look where it went. But there was a little trade there that some guys caught that didn't take it overnight. It was right here. Okay, this is more of an active type of strategy. It gapped down. There was no, it tried to get through, no follow through. It would have fake out to the downside. And then for me, guys like, why are you long this? I'm like, yeah, I'll give it a little chance. I bought 50 80s versus the low, and I think I held it all the way to somewhere around here and took a nice little cash flow trade because I wasn't caught in this mess. Wasn't taking a weak stock that I don't know that much about. I granted, no one knew it was going to pre-warn, but it happened. So if you weren't in it, it was your opportunity to use an active trader strategy calculated to buy it, and then once it went into this gap above this, I think it was like 51.30, you had a decent move. It wasn't blockbuster, but there was some money calculated there. And then once I think this happened is when I got away from it, and then I didn't look back. And now at this point, it's a real broken stock where I guess you could use today's low as a new point of reference. And then if it does do some work down here, maybe it's priced in. This huge move from 120 down to here. It's been cut in more than half. At some point after a little bit of work down here, maybe we'll get another trade into the gap above today's high in the future. But it's not something to knock yourself out with and really overly focus on. It was a nice surprise today, TBT. TBT, which has been something a lot of guys have been trying to catch for a while. Finally, it's getting some follow through. I know I bought it here, and then I got stopped out this last time when it didn't hold. But then I said, you know what, I'm not going to be upset about it. It ignited a few days back, had an inside day, so I bought it when it crossed above yesterday's high. So now you want to talk about momentum and breaking above momentum levels, okay? It broke above 65.19, so that's about when I got long it for continued movement, because in order to go higher, what did it have to do? It had to trade through this level. So if it would have traded through this level and found no buyers, it would have failed and put a little topping tail in and did a lot of the things it's done in the past. This time, no, it went above it, stayed above it, and ignited through the 200-day. First time this has been above this 200-day in a long time. That shows you that money could be coming. Oh, is it above the 200-day? No, it's not. It's right there. Money could be coming out of bonds, and you look at the short on the bond trade, okay, where it's paying people to stay with it. Wasn't easy at all, more for macro guys, but there's money coming out of bonds. And at some point, it'll probably go into equities. Right now, I think the street's going to have to psychologically deal with the fact, if you come back to me, that the Fed might not be as accommodative. But why are they not being as accommodative? Because maybe the economy is getting better. I do feel like there's a little smoke and mirrors in there, and don't want you to be sold the Brooklyn Bridge. But I do think that they can't keep these rates down here forever, and we're going to have to support ourselves. I know there's going to be there's a lack of volume right now in the market as it is. So if all of a sudden they stop buying things, the economy can get better and the market might go lower because who knows what they were buying besides keeping the futures low, the interest rates down. Some people say they buy S&P futures, whatever. Who knows what they actually do? But if they don't have the money to do it in a form of QE, we'll see if there's other ways or other money coming into the market. Same way people didn't understand, how could we be going up on bad economic news or on a GDP of 2%? It's because you had the Fed in there buying certain instruments. So now we'll see what happens when it wanes off, because we could start getting really good numbers and then we just sell because there's not as many people left in the marketplace. So we'll see. So you keep it light and we figure it out. But all in all, you go back to the chart, here's the SPX, and you will see not such a big deal today. It traded above the high here of 1462, didn't have the momentum to take out 1474, no big deal. Still above this area, still above the level I talked about, a lot of the day at 1447. The longer we stay above here and digest what's been a heck of a move, the higher the probability we take out this 1474. And then on a monthly chart, look to, continue and at some point within the next year or so, take out this double top at 1570. But I do think equities are far from dead. I think you need to have a macro plan, and you need to also know how to maneuver it on an intermediate time frame so you could navigate the turns and the twists and the bumps. And there have been a lot of them along the way, but overall you have a low, a higher low, another higher low, another higher low, following the 8-day moving average, which is pretty constructive. So at some point, I do think we take out this double top. And if, for some reason, could happen, this trend breaks, we'll figure it out and we'll reevaluate it. Same way you had a trend from here that wound up breaking, and then it held below it, right? Couldn't get back above it, and then pow, there's always a small chance that could happen. So we're not going to fall asleep and say, it can't happen. But if the price action continues to be constructive, we are going to stay constructive on the market. And I do think you can have a macro monthly plan. You put money in every month, and at some point you'll make money there. People have been doing it even for this whole decade, have made money if all they did is every month over the course of the last decade cost average in, because just say they did that, their cost average is probably somewhere around here. So they're on the plus side. So if we do get up and go, they'll be finally getting paid for their time frame of mediocrity. So you could do a little bit of both, where you do that, but you also play these big descending channels that could give you lots of returns. When this descending channel broke to the upside, nice move, methodical. When this uptrend broke to the downside, you could have got out, raised some cash, got short, whatever. And then on this outside day, remember that day that was on March 31st, 09, big drastic outside day, and then we've seen a few of them. Where's the October 4th one? I think it's right here. That's October, that's the month. So that's that October one, and then you have the June one, and then you have the November one. So lots of patterns in here, micro, intermediate, macro. It all depends on your time frame. But if you don't know what your time frame is and you don't identify it, you're never going to know where you live. Okay, so you have to know whether you're an active trader, a swing trader, an intermediate trader, a macro investor. Whatever it is, it's different for everyone. So you have to just figure out your process and fine-tune the process and go from there. I'm going to be a little detached on Friday, Monday, Tuesday. I have a test on Tuesday that I have to take and I have to detach for. I'll have my phone with me, so there will be some tweets that go on. I'll try and log in and talk to the virtual trading floor for a while. I do have some positions that I will be putting stops in. You see them live on the VTF. And I'll try and study, take the test, so I don't have to detach again for a while. But all in all, great start to this week. There's been a lot of opportunity. Yes, a lot of it were with gaps, and you had to take some risk, but that wasn't in your control. The only thing that was in your control is how you handled it and how you mentally were able to deal with it. So Thursday night, have a good one. I wish you the best, and I will see you back here on video, probably not till Wednesday morning. So I wish you the best of luck.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.